Alright, so here is the this is one for a short signal here right now. Okay, so we've just got our first mark, and now we've got our second signal with the black line hitting the 30, and this is telling us to go short. And it's telling us to go short at this particular point in time, right after this candle. Where would we set our take profit targets? Alright, well, let's try the support level. Alright, so now we've gone short right here, and our take profit target got hit for 110 pips in what's that, 24 hours. Alright, in a whole day. So that's not bad. 110 pips for a day's work is pretty good. Alright, but you might turn around and say to yourself, this might have slipped out of your subconscious, but as you go along and you're getting all these trades perfect, you're going to go, right, okay, well, I'm not going to do one lot anymore. Sod what Loz says. I'm going to go and do 2 lots. I'm going to go and do 3 lots or whatever. I'm doing this perfect now. I've got this down pat. Don't, please, because you might do very well for a couple of months. You might do well for 3 months. You might actually make, like some of my students have. One guy that sticks out like a sore thumb put $20,000 into his account. After sitting with me for an hour and using one of my indicators that's based on these formulas that I'm showing you on these strategies, he turned his account into $85,000 in 3 weeks. But I knew he was trading at a high leverage, but this guy was Asian. And no offense to Asians, I love Asians, man. I mean, they're very, very smart people. But when it comes to gambling or anything to come related to money, they bet really big. And I was really wanting to make sure that this guy didn't blow out his money, because he's wanting to set his goal for $80,000 for the Christmas period, and he did hit it. And I gave him a plan to stick to that would have been a more conservative approach to trade, and he would have hit his target, but not on Christmas. It would have been just after the New Year. But he wasn't happy with that, and he went ahead and did it his way anyway. But he is just one freak of an instance where a guy has done really well. Alright, so you've got to really, really focus for the long term here. Okay, and really have the patience for the long term, and you'll do a lot better. Alright, so yeah, so in short, really, when you see the blue line cross over the red line, the next immediate thing in your mind that you should be focusing on is waiting for this black line to hit 30 as well. Now, if the black line hits the blue line at the time where it hits the 30 mark, great. You can probably go in it for 2 lots, probably risk, sorry, not 2 lots, $2 a pip, like 0.02, sorry, 0.2 of a lot. Okay, so that would equate to around about 2.5% of your overall balance. So that's perfect, that you're within the maximum. Really is 5% of a risk that you should really go towards. Alright, but 3% is the average. Alright, 5% is going beyond extremes. Alright, so when that happens, I would probably go in for like $2 a pip. And here again, it would have gone in, and I would have made 110 pips, 220 bucks or something like that. Alright, let's take you back and let's take a look at some other currencies where we can see things going. Alright, here we have a crossover right here, and this is going to let us know that the market's going to come down. The next thing we need to look at is to make sure that the average the ADX is actually above 30, and if it is, we can immediately go short. Boom. Alright, and down it comes. Alright, when do you close out, you might be asking? Well, we look for the opposite. We see where the blue here actually crosses the red. This is the red line I've got my cursor over, and this is the blue line I've got my cursor over, and you can see the blue crosses over the red, and the ADX line, the strength indicator, is way above the 30 line. So that's a good area to close that trade and also flip and go back the other way, because the ADX line is above 30. If, however, we were still, this presume that this area wasn't there and we were still in a downwards trend, and you can see where the blue line here crossed. Okay, it crossed the red, but the black line is still below the 30 line. You see that? With the previous example that I just gave you, we could have gone long, but in this example we can't go long because the black line is below the 30 zero. Now if it's kind of like hovering, it's going sideways on the 30-0, my best advice that I can give you in that scenario is to wait, because the Forex is going to be here the next hour, tomorrow, next week, next month, next year, and for many years to come. So you're always going to have another opportunity. Alright. Let's see if we can find some more good signals. Now here is one where it's not essentially crossing over the red line here. It's kind of just nipped the red line and then bounced off of it. That's not a good signal either, and you can see that the market went up. Don't beat yourself up when you say, oh man, I wish I should have got into this move went up, this, that and the other. Stick to what it is that I'm saying, and you'll have a much better success rate. Alright, here's another instance where we had the red line cross over the blue, but it didn't really kick in until around about here. Alright, now this is a little bit more of a precarious trade to get into. When you see a lot of things like this black line, when you see like the history of its black line is kind of not really piercing over the 30 line, then there's a pretty good chance in it saying to you that you're only going to get a small pip gain if you were to open on any trades that fit the criteria that I've been explained to open buy and sell trades. Alright, but as I say, you're going to have to be very nimble. Alright, like this one for instance here is a nice sell signal, but the sell signal is very short-lived. Okay, because here is the next support level right here, and if we took this at this particular level, our take profit would have only been 26 pips. So you think about this ahead of time before you open the trade. Try not to get too panicky or too excited and opening the trade too quickly because you feel that you don't want to miss any pips, but don't worry about that. Just make sure you do all this properly and put in your support line. Alright, see if there is any immediate support at that particular time when a sell signal comes in. And if the support is too close, like 20 pips is nothing, you don't really want to go for those, because when that target is very small, there's a very good chance for the market to reverse, and it does. Like, it comes down a little bit and then it goes back up the other way. Alright, let's see if we can find some more areas where we can show you where you can actually get in. Here is another area. We can see that the blue line here is now crossed, it's reached into the 30 area, and now it's hit that black line. Great, that's what we want. Alright, so where that signal appeared, it appeared right on a support line, so that's good. That's what we want. Alright, and now we can ride this trade until it basically crosses over again. Here is a red line here. We can actually get out around about there, but we would have got in around about there, so that's around about an 80 pip gain, so that's not too bad. Alright, but the thing is, it's over a period of almost 70 hours. So, it comes and goes with the territory, really. Alright, let's see if we can see any sell signals. Oh, here's a nice sell signal. Here is where it starts to cross over the blue, and then what we're waiting for next is for the black line to go over the 30. It does it right there. Okay, so where should we put our take profit? Well, we could look at this section right here, we can look at this section right there. I would most likely prefer to take this support level rather than this support level, because there are two instances in the market where it's basically agreed and the price stuck and it continued to go up higher. So I would choose the next support level a little bit lower. Alright, so then I'll try and work out how much I would get from that. So it'll be from around about here on the next candle on the bottom and down to around about there. So that's 180 pips in 36 hours. So that's not bad. Now, when you get to that kind of level, you don't really want to just close your trade out, alright, at the desired TP. When you see big moves like big candles like this, big candles normally represent more power to come, more movement to come. Majority of the time, at least, not all the time, but a majority of the time, because there is a lot of influence behind this candle to let you know there's going to be another big candle afterwards. Alright. So yeah, so then what you do is you move your stop loss to maybe either break even or book in 100 pips and then let the trade ride to the next support level, which is down here. Alright, and we can see there's another confirmation of a support level as well, so this will probably might be an area where it might reject. Does it reject? Yeah, it does. It rejects it right there, but we could have actually rode this all the way down for 390 odd pips over a period of 80 hours. Alright, so use this indicator quite a lot when you're doing your live trades. Alright, but not at the moment. You need to go through all these, go through all these indicators first, and then find your best indicator that you like, and then when we get into the higher modules, we'll start telling you how you can use one indicator with another. Alright, and then create your own personal signals that you'll stick with from until now, until the end of time, so to speak. Or unless you're like me and you like to learn loads of strategies. Alright, so play around with that. Okay, and if you have any questions, again, just let us know. Alright, and I will see you very soon in the next video. Alright, bye for now.